Yes, okay, we'll go ahead and call the meeting to order. It is 12:31. Still waiting for a couple people, Gary Fox and John Woods, I guess. But let's start with the minutes. Is there a motion to approve the minutes from the last meeting? So Miller?
Second.
Second by Alex. Okay, is there any discussion, minutes, changes? Okay, you're okay? All right, all in favor of approving the minutes? Yes. Aye. Opposed? And any abstentions? Okay, so the minutes are approved. Okay, so we promised that Heidi White, our auditor from DTD, would be available, and indeed she is. So if Heidi, you can do whatever presentation and whatever questions that the committee might have.
Thank you very much. It really is nice to be here. I know we formally present our audit report to the board every year, but that form may not give a good spot to ask questions. And so when Rick suggested that we come and provide this information to you, I think it was a good opportunity to maybe put a little bit more information out than what you normally see just at an audit presentation. The district is required to undergo both a financial statement and a compliance audit every year. That audit process doesn't take place just after the books are closed. We are looking at the controls, looking at the processes and procedures, probably from about April forward, going into the accounts payable, receivable, bookstore, student accounting offices, even into some of the department offices when we know that monies are collected there. So we try to get as broad of a focus of what the financial activities of the college are well before we undergo the final audit, so that when we know that the district has closed their books and records, know that all activity is posted, we can then come in and do confirmations. We confirm with outside agencies, we confirm with your County Office of Education, we confirm with other reports that are generated both by the district and at the State Chancellor's Office. This allows us to get a really good idea as to whether or not the information that's been presented to the Board of Trustees, to the faculty, to other members throughout the community is complete, correct, and accurate. We have been the auditors for the district for a number of years. We report every year to the Board of Trustees. The Board of Trustees is actually the one that hires us. We report to them through their finance committee. We report to them directly at the public meeting for the board. At any point in time, we're going under the direction of the board. We don't, although we're giving information to management, to the president, and others on campus throughout the audit process, our true reporting goes back up to the district. We have been able in the past, hopefully going forward, to issue an unqualified opinion on the financial statements, which says that they are in accordance with generally accepted accounting principles, that they're consistent and materially correct. We cannot look at every single transaction. That would be impossible. That's why we look at controls. That's why we look at processes and procedures. If we are doing test sampling and we determine that the controls are in place, we have a higher level of assurance when we look at actual transactions that they're going to be consistently followed throughout the year within all departments and all areas.
And just to explain, unqualified means something different than what it sounds.
That's probably true. Normally when you look at something that is unqualified, you go, oh, I didn't want that. But in this case, a qualified opinion says, except for some item, your financial statements are materially correct. That exception qualifies the opinion. My opinion is that everything is in accordance with government accounting standards. It is in accordance with generally accepted accounting principles. So if I have to say except for, and this is something we've done with other districts and other clients, except for the fact that you can't keep track of your fixed assets, except for the fact that your cash hasn't been reconciled for an entire year, except for the fact that some transactions are not posted within the books and records, the financial statements are materially correct, or we can't provide, we disclaim an opinion on the financial statements and say we can't give you an opinion on those financial statements. Here at PCC, we've been able to issue an unqualified opinion saying that they are materially correct, that they are in accordance with audit standards and meet all requirements from that direction. So here, an unqualified opinion is really what you want to get. The areas, and I know that as part of your packet of materials, information on the last year's audit was sent out to you. And if you have it or if you just want to make a note, one of the pages that I would direct you to is page 52. This is a page where we will put all of the funds of the district individually and all audit adjustments that affected that fund. What that means is that when the district closed their books, there was a transaction or a group of transactions that were not properly accounted for, were missed in the accrual process, or something else happened with those funds that we had to place an adjustment to them. Last year there was an adjustment within the internal service fund because there was a new actuarial study that said what your claims liability was. This was not posted prior to closing, so we did make an adjustment to that liability fund. Other than that, there were no adjustments to the general unrestricted fund, which is your primary operations, capital project funds, special revenue funds, or any other fund of the district. Question?
No, it's just, and that we've got a seat up here.
Oh,
You're so
thank you. But I'm not going to be able to stay long.
Oh, that's fine.
So as you go through, I think when you look at reports in the future, this is a good page to look at within the report to be able to say whether or not information that's been presented to you has been able to go through a third-party review and has been audited and has been found to meet standards that are appropriate. So it's not always page 52, but it's right about that same spot depending on how the notes and disclosures go. But I would focus you there. The one thing that is maybe not quite as transparent within this report is that all of the records are consolidated together. This is called business type activity model. It was required under a Government Accounting Standards Board statement and the State Chancellor's Office. It doesn't look at each fund individually, but looks at PCC as a total district, and so everything is consolidated. But as you go through, you can see certain areas such as student tuition and fees. It's consistently about $26 million. But that's not all revenue that's coming into the district. There's been a huge increase to the bog fee waivers. A lot of students are not actually paying those tuition fees. They get them waived through the Board of Governors grants. In 2010-11 year, that amount was almost $8 million that came off of that. The apportionment that the state or that the district relies on from the state to fund a major part of operations, as you know, has been undergoing huge swings. The state has been balancing a lot of the dollars that the state needs to operate based on education, both at a K-12 level as well as the community college and the UC system. That apportionment has been deficited, it has been cut, and then probably most important, they'll say, well, we'll give you the money to account for the revenue, but by the way, the cash isn't coming in for another 5 or 6 months. Luckily, the last couple of years, it's been about 3 months before all that cash comes in. But it looks like this year, it may extend out about 5 to 6 months. What that does is it brings it outside the current accounting cycle. Something that is due to you in 6 months can't be used for current operations. I don't think anyone here would want to know that payroll is saying, well, we are going to pay you, but we're not going to give you that check for 6 months. That's essentially what's happening to the district. So it's not really revenue that is associated and appropriate for the 11-12 year if it goes out beyond that amount. So it's really a cut in the amount of apportionment that the district is going to get. That's an open issue, and there's a lot of those kinds of things that are going to be decided probably through the May revise and some of the other areas that are coming down. The tax increase that is being proposed on the ballot this fall is going to have a huge impact on what the district is able to get, and districts throughout the state. So there's a lot of those kinds of things that are just kind of up in the air, and we're watching them, we're making sure that districts are accounting for those properly, and if there's an adjustment that needs to happen, we will make that within the financial statement so that they are accurate and correct.
So if it sits outside of the current year, then what happens?
it really becomes revenue into the next year. What that does is it cuts the amount of revenue that you can include in this year's accounting. So where in 2010-11, the apportionment was $80 million, all of a sudden, if that comes down to $70 million, what was your deferral last year? I can't recall right off. 19. So you take $20 million, all of a sudden that's $20 million of revenue that you can't account for within this accounting cycle. And the revenue is going to go down to $60 million. Well, all of a sudden you've got a huge swing, and that's a huge impact to what the district is going to have to deal with. Those are issues that cannot be made lightly and would not be made on a district by district basis. That's something that's going to affect the entire system. And unfortunately, if, from an accounting standpoint, a lot of what happens at the state, we look at and say, well, that's kind of smoke and mirrors. You delay paying payroll June 30th, you pay it July 30th and say, oh, look, we saved money. You really didn't save money. This deferral of cash is not really saving the state anything. They still owe it to you. You've earned it, but based on how that accounting cycle is going to go, it may move into the following year and not be available. And I believe that would be current and ongoing. It's effectively cut you that amount of money, not just in the 1 year, but on an ongoing basis as well. So those are some of the things that are happening at the state level right now that are still going to be decided. And here it is, May 11th. Your year is gone. And so we're looking at how it is that some of those decisions that are happening at the state are going to impact our clients, and how it is that we're going to develop audit procedures to ensure that they're properly accounted for and that they're used appropriately within the funds and accounts that the district has. I know that this is, I think it's kind of a question and answer period as well. And I think that those are some of the highlights to say this is where we left off last year and what we are sort of knowing about what's happening this year, but we're still kind of in a bubble, and we can't really show where it is that the district is going to end up. We were in, I think it was the last week of April, no, it was in May. It was in April. We were in the last couple of weeks of April looking at what the records were so far. And what's been accounted for is correct. We're finding the controls that the district has in place are there and are functioning. Everybody's having to deal with fewer resources, not just dollars, but people as well. So keeping the controls in place when you have fewer people to do those transactions is very important. And we're finding that the district has been dealing with that appropriately as well. So that we've already put together some good analysis, I think, that will allow us to look, okay, we know what you are in April, what are you going to be in June? And we're already developing some of those expectations for the district. So, Bob?
So when you say you're developing those expectations, you'll be reporting out a report for Rick and Marie? Is that what you're...
Really for our audits.
For our audits,
so that when we look to say, okay, Marie's given us this information to say this is what the ending balance is or what the transactions are within these accounts, we're already expecting them to be within a certain range.
Sure.
If they're not, we will do more testing and find out why.
Okay, so just like when you say when the state defers paying after June 30, put it into July, so it looks like there's a savings when there really isn't a savings. You have the same thing in reverse if you can't include the deferrals, $20 million that's going to come in October, you can't include it in this year, so it looks like a $20 million cut. But it really isn't a $20 million cut because we've never not been paid those deferrals, and the only way they wouldn't be paid is if the state went bankrupt. So it may appear, and I understand there's rules about accounting and all that, I don't understand them all, but the point is, in reality, just like deferring a payment after June 30th looks like a savings and it isn't, just because you can't include a deferred payment of $20 million that is coming from the state unless it goes bankrupt, isn't really a loss of $20 million in reality.
In looking at the long term, I would say, yes, you're right. But in looking at the long term, that payment is going farther and farther out. And at some point, it has to be recognized that it is a cut. The state is not recognizing that liability that they owe it to you, and they're not giving you the payment. And so you're trying, the district's throughout the state, not just here, but the districts throughout the state are trying to record that as revenue. They've earned it. Those FTES were generated appropriately, property taxes were brought in appropriately. That, everyone would agree, that is your revenue. However, if the state's going to pull it out and say, okay, well, you can get it in 5 months, you can get it in 6 months, oh, we need it a little bit longer, it's going to be 8 or 9 months, and suddenly you go a full year without getting it. It's tough to spend that money when you don't have the cash. And that, I think, is what's impacting the district. I don't think any district is truly believing they're not going to get it at some point in time, but it's tough to base a current budget on cash that's not coming in a timely manner.
But it's a cash flow problem. It's not really a loss of that money, but it's a cash flow problem for ongoing operations.
It definitely is a cash flow problem, and we are looking at whether or not that terminology of saying it's deferred, how long can you really defer it until you just admit that you cut it out and you do a catch-up. If they do a catch-up, then that would really resolve the situation. If in 2012-13 or 2013-14, you could say we got our current amount, the 80 million, plus the 20 million that was withheld from us, so we've really got 100 million that came in this year, then you're back to square one. But right now, we're not seeing that turn around. It's one of the things we're looking at, and we're trying to see how it happens. When we look at a district's financial condition, we used to look specifically at the reserve level of the unrestricted fund, because that's the operating fund of the district. And most districts throughout the state will have anywhere from required 5 up to 10, 12, 15. I have one district that's about 22%, but they don't have enough cash to pay payroll. So their reserves are perfect. From a financial statement condition, if that's the only thing that we look at, they're in great shape, but they don't have cash to pay payroll. And so they're having to either go out for trans, other borrowings, or borrow from other funds that were provided for a purpose other than general operations. And that's where the districts are really having a hard time, is how can you balance your current budget based on cash and dollars that you're going to get into the future.
So the immediate problem is cash flow. The secondary problem could be the deferred revenue and whether it really ever comes to us or not, because we don't know. I mean, they could decide that the state fiscal situation is such a mess that they're not going to, they're not going to pay us and others. I suppose that could result in lawsuits and suing and everything, but that could take forever. But can you even sue the state? I mean, does anybody know if we even have the ability to sue the state?
That's a great legal question. I would
Yeah.
probably take a test case.
Right.
How long can these deferrals go on, and can a district sue to say we've earned this money? You owe us as a state, and it would take all of those resources from a legal standpoint to resolve that.
Okay, yeah, looking through the audit on the college itself, not the foundation. On page 9, they list ancillary services and auxiliary. I was just curious what that is. And I don't know,
Is that the statement of the functional expenses that are kind of within the MD&A? They're sideways like this.
Yeah, they
okay.
list instruction, non-instruction, about 2/3 of the way down.
That's for your TOPS codes.
It's what now?
Those would be just based on your TOPS codes. So your ancillary services are not the foundation. I'll let you kind of jump in with specifically what those are.
Well, TOPS is the taxonomy of programs from the state of California, so
Right.
it must be some way that we're allocating funds to that taxonomy.
I think it goes into the bookstore, it goes somewhat into your internal service funds, any kind of food programs that you might have. I believe that community services is online. I can go through and I can get what the rest of those auxiliary.
Okay. Well,
The student funds, associated students comes through there as well.
I guess part of the reason, sorry, go ahead.
I'll provide him everything, including definitions and description of the different tax codes, so he would be able to understand it, and I'll explain to him how that's being tied up to cost centers.
Okay.
I need special help.
You need to.
The reason is because going from 2010 to 2011, that account went up by 2.4 million, over 100%, when I thought we were doing cutbacks. So I was just curious what's in that account. So.
But I think during that time too, that's when the student activity fee was implemented. And that's $10 per semester per student.
$5 during the
$5 during intersession, so that's a huge amount of money.
Yeah, okay, so I just trying to understand what it was, so that could be it.
Does parking flow through there? Yeah, we've got auxiliary. That might also be a portion of parking as well.
So then I had another question on page 11. It talks about other long-term obligations, and our long-term obligations from 2010 to 2011 went up by $5 million. And again, maybe this isn't a question for her, maybe it's another question for you. I don't know.
And as you're looking at the report, all of that is on page 30.
I don't have a full report.
When you look at it, it's note 10 is where you want to go to. Those are the long-term obligations. Certificates of participation, some of that is your other post-employment benefits, the retiree benefits that need to be accrued within the financial statements. That's probably where the majority of that increase comes up. Also, there was a PARS supplementary retirement plan that was instituted at the end of 2011, and that was a significant portion of that additional debt that was brought on.
Okay.
Go ahead.
At the bottom of page 11, the unrestricted net assets, it lists about $32 million there. I know we have I assume that includes the $19 million in reserve cash, but what else would that include? Or maybe it doesn't include that.
This is all consolidated funds. So as we consolidate up all funds, it includes all of your special revenue funds, capital outlay project funds that are not designated within being restricted for either the purchase or acquisition of your assets, debt service, or specific capital projects. So it includes bookstore. It includes anything that's left over within student financial aid. It includes, it would include the amount that has been set aside for retiree benefits. All of that would flow to the unrestricted line.
So if there were $4.4 million in a property acquisition fund under capital outlay, that would not be in this. Because
no, that should be included in capital projects,
yeah, okay,
or invested in capital assets net of related debt. It could be in either of those. I can map it through to show you which one it's in, but it would not be unrestricted.
So if there's an object code and it's designated for a specific purpose, it doesn't come under this because these are unrestricted, and that would be considered restricted.
Yeah, and it has to be specifically restricted, the ending balance. And so it could have been designated by the board for a certain purpose, but unless it's truly restricted and it's in a capital project or one of the other areas, it's going to flow through here. So that's where I can get to Marie exactly where the mapping was that came up with that.
So the money in those accounts, capital outlay accounts, like the property acquisition fund at $4.4 million, that's not really restricted. I mean, I know it's designated for that, but that's not really restricted.
Well, you have unrestricted funds and you have restricted funds.
Right.
Okay. Technically, capital outlay fund is not restricted.
Right.
Because the board can move it back again.
So it should be in this, correct?
I'd have to go back and look specifically. I want to give you a good answer and not just guess. So let me map it out so that you've got that and I can get it over to Marie Monday.
Anybody else can ask questions?
Well, I wonder if you can explain, and I think it's your note 16, and you mentioned to the board about the issue with cash. And you might also mention that an ending balance is not necessarily cash.
We do have a pretty extensive note that we've been adding to our district clients throughout the state. So this is by no means highlighted specifically for Pasadena. But we do have fiscal issues that are impacting this specific college based on statewide issues that are out of the control. Currently about that, there's over 700 FTES that are not funded because they placed a cap on what they're going to fund based on. There's been a deficit that has been applied, and in addition to that is the deferral, that $19 million that was deferred from being paid to you in cash and is not paid again until into the 11-12 year. The general fund reserves, when we look at those, if I just look at the general fund reserve number, it meets all state standards. It meets the standards that the accreditation teams will look at to say, is the district fiscally solvent? All of that is there. But then when we look at what is made up of that ending balance and the amount that is a receivable from the state is designated, or not designated, but is held for other purposes, and how much of it is not cash. The cash balance really becomes the offset to what the fund balance reserves are. And I would caution you, and I do believe that yes, you will get that money. But I do caution you when looking at the reserves to look at cash balance as well, because that is a big impact on how the district is paying its bills, whether it's to employees, which are probably about 85% of the cash budget for a district, or its vendors, and how that's going to impact the district on a long-term basis.
And you have more?
Yeah, just, I think this is the last one, but I was reading your note 11 on page 36 about post-employment health care plan and other post-employment benefits. So I was looking through that, and it says for fiscal year 2010-11, the district contributed $956,000, and they got a chart on the next page, page 37. And it looks like in 2009, 10, and 11, the amount that the college contributed as opposed to the actual cost was roughly 55 to 58%. So our current liabilities are $13.3 million, and what it says is currently in there is $15.5 million. So we're about $2.2 million overfunded in that account, but we haven't been paying the full amount. So does that mean that, for instance, back in 2008, since we, over the last 3 years, it's about almost $5 million, 2.3, 4, $4.5 million, that we haven't paid the full amount of the cost of this. So we were overfunded approximately $6.5, $7 million back then, and then we've slowly gone down, and we're just keeping going down because we're not paying the full amount? Is that, I'm just...
It seems that way, but unfortunately, one of the anomalies of this note and how GASB set up the contributions and being able to say what has been funded versus what has just been paid. Unless a district opts for a trust fund, putting that money, the cash, in an irrevocable trust, even if they move cash into a designated balance, we're showing it as not being funded. It has not yet been funded. The amount that's showing here as actual contribution is the pay-as-you-go amount. That's the amount that actually went out for those benefits during the year. In order to take that obligation and be able to set aside your reserves, in 2011, the district should have put $1.6 million into this fund. They have over the years, through a variety of one-time funds and board-approved transfers, put money into a special account that says, yes, this is for our retiree benefits. And depending on the actuarial study, at this point, it was requiring that the $13.3 million had been set aside. We can't tell you that it's been funded yet because it's not in that irrevocable trust. But within the fund that holds that, there is the $15.5 million that has been set aside and designated by the board.
Which is actually $2.2 million more than what they need according to the liabilities.
Which I think is why there wasn't anything else going in for the last 2 years.
Not including all the people who just retired.
Well, it's not so much the new retirees as the new employees.
Right.
Because through the actuarial process it was taken into account. But one of the next people that we're going to meet with is going to be the actuarial who did the study, and I think that those numbers have narrowed considerably. We might be, I think that if I recall, we're within $600,000 now. Is that not true?
Yeah, because
It's like 15 versus 15.6
no,
or something like that.
15.6 versus 15.
So our liability is 15 and we have about 15.6.
But it's still unfunded, okay, that's what Heidi's
But
telling me.
what happens is that our liability is now offset by an asset. So in terms of the balance sheet,
You're
they
good.
they wash.
Mhm.
But we still have access to the money because it's not been put into the irrevocable trust.
And I believe that that's what gives the district some flexibility with those deferrals. But if you're waiting for $19 million to come in from the state, and you've got $15 million that's been set aside, there is still a shortfall. So you're still having to say, okay, where is this additional $4 million going to come in? So, you know, it's just kind of waiting to see what comes.
Well, I'm glad it's not in the restricted, in the,
Irrevocable.
sorry, irrevocable. But the point is that the money is actually there. Now, I guess, since this, we think it's about, our liability is about 15 million, and we have about 15.6.
I think that, and again, we'll have the actuarial come in and explain that because it's some pretty erudite mathematics to get to those calculations. But what it does do for us is, as soon as we put it into a irrevocable trust, we have no access to the money at all.
Right, so we wouldn't want to do that.
And that's part of the reason why the board's chosen to do it this way. On the one hand, it is true that we have not funded the liability. On the other hand, we have stacked up assets to offset the equivalent liability. So there's no net damage to the bottom line of the district on the balance sheet.
Okay, so then my last question, I don't know if it's a question for you or you, but so the actual contribution that we make, which has been roughly 58%, then 54, then 58, how do we decide what the actual contribution was? Because the actual cost was more. So how do we decide how much we?
And what we've done is, the last year we did not make a contribution to the fund for the first time.
In 2011?
And
Because this says
in the
there's
current
no-
year, no, in the current year budget.
So
So that's the 11-12 budget. Those are the audited statements for the last year.
Okay.
In the current year budget, we did make a contribution. And after we speak to the actuarial, I think that our conclusion as a group will be to recommend to the board that we not make a contribution again next year. What we're doing, as Heidi described, is the pay-as-you-go. We're actually paying the ongoing expense. What we're doing is we've got the money set aside to pay, to offset the stack-up liability.
Okay, and where does the interest go for the $15 million? And does that stay in that
It
fund?
stays in that fund.
Yeah.
And can you just describe the process of GASB 4345 and what the overall principle is, what they're trying to accomplish?
They're really trying to have governmental entities look like a for-profit corporation. If a for-profit corporation has benefit plans that are owed to their employees, they're accrued on an actual basis. Every year that is accrued and funded for the most part. They get around the funding sometimes themselves as well. But it is accrued and it is part of their bottom line net revenue, income, what is reported out to their shareholders. So they really felt that governments needed to do that as well. And throughout the state, including the state of California, but cities, counties, K-12s, colleges were told to implement this several years ago. What they did was they said, you know what, you document what your liability is, and you don't have to come up with that funding right away. We're going to amortize it over a 30-year period of time so that it gives you a chance to rationally and logically set aside money that you've promised to your employees. You've told them that you're going to pay these benefits after they retire. Well, just doing a pay-as-you-go basis in a time of financial crisis, if you don't have money set aside, I don't think anybody wants to go to their retirees and say, I'm sorry, we're not paying your health benefits this year, or we're having to cut back for what we had promised you. That's something in the pension side that's being asked right now of a lot of entities. And so to do that with your healthcare costs was felt that was not reasonable, and that governments had the same obligation to set that money aside, or at least recognize that liability that they owe to their employees over, like I said, a rational and reasonable period of time, and they determined that was 30 years. What they didn't do was say you had to fund it. And I think that has caused almost as much confusion as the whole GASB 45 issue as to why it is that this even needs to be accrued. Because if you don't fund it, that liability just increases It's really not a general fund issue because it's something that you can pay for on a regular basis and budget your current year expense. And it's on a full accrual basis, which really the only time you actually see that liability then is within this audit report. Your financials during the year are on a fund basis, which is modified accrual, and just like the deferrals, we're only going to talk about what's coming due within probably about the next 3 to 6 months. So it's not impacting the general fund or any other fund that has payroll during the year. This is something, though, that says, yes, you have to recognize it. Now, the liability that is owed to your employees is very much a locally controlled decision. We have some districts that have no liability at all. They did not promise to pay any health care costs after retirement at all. We have others that pay it through forever. $150, $200 million that is being accrued over the same 30-year period of time, and the ongoing cost of that is impacting their current year budget because the workforce has aged, and because of retirement packages going out, more employees are now eligible for those benefits, and they are having to pay a larger and larger portion of their budget to the retiree benefits. Well, that's a promise that's been provided, and so it's absolutely appropriate for that to happen. But without having money set aside, it will impact your current budget, and it will impact expenditures and decisions that you're making on a regular basis, because that expense and the obligation is going to increase over time. And then healthcare costs rise, and all the other parts of that are within the same parameters that the actuary will look at and say, well, increases are coming up this way, your retirement rates are going this way, and an actuary can explain that way better than I can. So.
Can you explain GASB? And secondly, what happens with Obamacare? In terms
Great
of...
questions. GASB is the Governmental Accounting Standards Board, and it is the oversight agency for all governmental entities. And that's whether you're an educational entity, a city, a county, a special district, the states. Even the federal government is required to follow GASB. Unfortunately, if you look at federal government audit reports, I don't think they've had an unqualified opinion in years. So I'm not sure what the state's got. I haven't looked at theirs for quite a while. But their ability to follow these pronouncements really reflects on a district to be able to provide financial statements that meet all criteria, and they are standards that are for everyone to follow. The state chancellor's office has clearly and consistently come down that when a GASB pronouncement is issued, it will be followed by all districts. So that part of it is the GASB portion, and that's what we look to for guidance when there's something new coming out to say how is that going to impact a specific district or group of clients and the accounting that goes with it. Obamacare, again, depending on what's going to happen, I don't think it will specifically impact PCC. You've got a great healthcare plan, and if you keep it just the way it is, that's what you will continue to go with. If you choose, and I'm not 100% sure if governments can choose to opt out, that would be another decision point, but you still have the obligation to pay for your retirees because you did promise them that as part of theirs. So the Obamacare, it keeps kind of shifting as far as where the focus is and what the actual impact will be. And we keep looking at it to see that it changes on a regular basis.
I got one last question. You said we're paying as we go, but the chart in here says this is the annual OPEB cost, and then the contribution is only 58% of that. So I'm not clear if that's the actual cost, if we're paying on a cost basis, or is that the cost for other things that are coming in the future? So,
the pay-as-you-go, Marie, is slightly under $1 million, or?
yeah, it was 956,000.
Right, okay, so that's the pay-as-you-go portion.
Current premiums.
Pardon?
Current premiums.
Current, right. So I don't have that in front of me, but then we probably made a $1.4 million contribution. Is that true?
No, well, no, the contribution we made was 956, so we.
No, but there's actual, we made a contribution to the fund
for the bus fee, we contributed 1.4.
1.4.
We actually put in $1,050,000.
Okay.
Okay, that's not showing on this chart here, so I guess I'm not totally following what you're saying. Because this is saying, and again, I'm just probably misunderstanding it, but the obligation was, well, the actual contribution was $956,000, but the cost was 1.6 roughly. So we paid, percentage contributed was 58%.
That's the actuarial determined annual cost. If you had fully funded it,
Okay.
you would have funded at the rate of the 1.6 million, and then from that 1.6, you would have paid the 950,000 out. The rest would have
This
stayed
year,
in
the
the.
rest would have stayed in for future liabilities.
Correct.
Right.
500,000 would have been available to
Yeah.
fund that liability as it came due in
Right,
the
right,
future.
okay. Okay. That's what I understand. Thanks.
Okay. Anybody else? I've got one other question. Can you explain, because it's in the news, basic aid and how that works?
The state apportionment process has been in place for a number of years, and I believe it's AB 365. Determines all the components that go into the state apportionment. The three components are basically property taxes, student revenues, student enrollment fees, and then the remaining portion of it is state apportionment. Depending on the dynamics of those three components, your pie doesn't increase. It stays the same. So property taxes go down theoretically, apportionment is going to go up to keep you whole. The same with student enrollment fees. When you, however, are at that point where your property taxes, the amount collected for property taxes based on valuations, when that exceeds your state apportionment, they don't cut you off and only give you the amount that was set. They say, nope, you get to keep everything. So you no longer are receiving any state apportionment. Well, when that happens, you also get to keep all your student enrollment fees. So a basic aid district does not have to rely on the issues that are happening with most other districts. And right now there's 3 within the state, 2 in Northern California and 1 in San Diego County. But they don't have to rely on all these changes that the state is going through. Is there going to be a deferral? Is there going to be a deficit applied to our apportionment? Is any of that going to happen? Because they're going to keep all of their property taxes. Gives them a much more stable ability to budget each year, to set aside money as they may see fit, to expand programs and services as they can. All of those things, because they have a very stable operating environment. They're not relying on the state for any of that.
Okay, so what's the downside to doing that, if any?
Well, it's not something that you can necessarily do. It is a factor of where are your property taxes. If you look at the 3 components and you see that property taxes are increasing and they're secured-roll, unsecured, the kind of the wild card is ERAF, which was the Education Revenue Augmentation Fund, I think is what it stands for. But it's the monies that come in through the county and are allocated specifically out to the educational environment. Well, the last couple of years, for most counties and most districts, that's been a negative. They've actually taken money out of that fund to fund other promised amounts that were given to cities and counties and other agencies. And so you've actually had a takeaway from the ERAF monies. Unfortunately, the state doesn't always backfill that. They'll say, nope, you anticipated getting it, we're not going to give you any more on the apportionment side based on ERAF. Well, when ERAF comes in a large chunk, and all of a sudden you do have those excess property taxes, that can swing you one way or the other within being a basic aid district. And I believe that's the key component that happened this past year with one of the districts up in Northern California, where they have not been basic aid, and this year they are. But it's not something you can actually apply for, or you can necessarily change the assumptions within those 3 components to make yourself basic aid. You can watch those areas and you can look to see how your property valuations are coming in. And once you get to that point, it does help you with your cash flow, because as the county's paying out that the property taxes, they're paying them to you, not within any other agency or flowing through, and you're able to get those on a regular basis.
Okay, I guess I just missed the piece about, we can't just, if we determine that it was wise of us to try to become a basic aid district, we just can't automatically do that though, can we?
No, there's a whole process that you
Yeah.
have to go through in order to get there. And
I don't think it would work for us anyway. Given-
well, you know, the deal that for us is that we're, in terms of property taxes, a pretty rich district. And what you have to do is there's got to be some pretty careful analysis before we even contemplate going down that path. Can you swing in and out of being basic aid?
You can, depending on how the property tax flow in, how your student enrollment fees come in, you can. We've worked with several districts that have been basic aid for 2 or 3 years, and then all of a sudden for 2 or 3, they're back into the system. It may not be for a large amount of money, because their property taxes aren't just gonna fall off the chart, but they could flow back in so that maybe they need another 300,000 or 400,000 augmentation from the state, and they're not considered basic aid at that time.
And then what happens to the pot of money that's left in Sacramento when districts go basic aid?
That's good news for everybody else, because that's reallocated through the apportionment process to all other districts. So during the 11-12 year, there's been a deficit factor applied to all apportionment, and it's possible that with this district coming out, that deficit will go to 0. But nobody's willing to take a stand to say, yes, you're going to get all of your money. That's, I think we're waiting for the May revise to come out to say this is the actual property taxes that are coming in. It may be used to backfill some of the property tax monies that have not come in the past. There's somebody had questioned whether that would be used to restore funding from FTES that's been lost. All of those are options and opportunities, but basically this chunk of money will be reallocated throughout the state, because just like the district is set with its pie, the state apportionment is set with a pie. So if one district isn't going to get the chunk of money, it's not going away. It will stay within the pot and be reallocated. I'm just not seeing a good model right now to say how that's happening.
I guess we get property taxes currently. Okay, so if they go down, then the apportionment part goes up, whatever, okay, it fluctuates. So we're already getting the property taxes, and if those property taxes were enough to cover our whole amount, then we wouldn't need any apportionment. So I don't really understand how we could, if we're already receiving the property taxes and they're not exceeding the apportionment amount.
Because we don't get all of our property taxes. It goes into a central pot and it gets divvied out. The issue is that if you're in one of the richer districts and your property tax base is higher than what your apportionment can be, you can actually do better. But then what happens, of course, is for the poorer districts, they end up being subsidized is essentially what happens. So what Heidi's saying is that the pot of money is set aside. If some districts aren't taking their apportionment, then the amount of money that is distributed to the districts increases, because out of the 72 districts, you said 3?
Three.
3 of them are on basic aid.
2 of them have been in the past, and one new one came in this year. The issue with this year is that the college district that became basic aid is a single county community college district. It's actually San Mateo. So there's no other community college district within San Mateo County. Within LA County, you have a vast number of community college districts as well as K-12 districts. But when San Mateo was able to see their property taxes increase, they didn't have to share that with any other community college district. It all came into there. What it is doing, unfortunately, is it's shorting those K-12s. So, you know, there could be some issues on a long-term basis that are raised because of that. But for right now, it is helping San Mateo, because they're not looking at saying, well, my FTES are or are not funded. They're getting their monies through property tax and student enrollment fees. So they're able, really, at this point, to service more students, because they're not worried about whether or not the state's going to give them the money for them.
Okay, and then Danny.
Miraco's been doing this for many, many years very successfully. But again, it's because they're in a wealthier area. You talked about the analysis and what it would take. Huge job, outside people, inside people, it would have to be outside people to take a look at this, right? So that might be something we as a group want to think about. I don't want to incur a lot of cost.
Well, I think that we need to at least go through the analysis to see.
Right.
And ultimately, of course, it's a board decision.
Most of our district is a relatively wealthy district, that's your point, right?
Overwhelmingly, we're wealthy.
Yeah.
And furthermore, our property values haven't been decreasing.
As much as other.
And in some districts, it's not decreasing at all. In some areas of the district, it's not decreasing at all. So that's also counter-cyclical to the rest of the state.
I haven't stepped out for a minute, but I'm curious, can you explain this a little bit more to us, to me? Okay, so we collect taxes and property taxes, we get some of that, but some goes to the state? But if we do it this other way, we get to keep everything that's slotted for education, or?
Within your district, yeah. That portion that is allocatable to the district, you would get 100%. You don't have to say, well, it's shared either within the county or it's within the state system. It would be allocated to yours. Miracost is in a multi-college county, and yet they're able to retain all of the property taxes that are within their district. So it's not impossible. San Mateo, I think, had an easier way to do this because they're the only community college district in that county.
Okay, and then
But Miracosta was able to as well.
Okay, and how much state funding do we lose as a result of that?
Theoretically, you don't, because it all becomes local funding. You're actually going to end up with more funding. A basic aid district ends up with more funding than a district that's relying on apportionment because, number one, you're not getting all of your property taxes, and number two, the state can provide, can include a deficit or unfunded costs within there and dilute the amount that you're getting. So a basic aid district gets it all, and where possibly they had, just a throw out number, not anything. If your pot was 100 million before basic aid, the theory is your pot is probably 110 million after basic aid, but you have no state funding. It's all property taxes and local sources.
What happens if everybody does it?
Don't know how that would be possible, but.
Well, and the reason is because if the poorer districts, it would be upside down.
Right. What would happen is.
So what would happen if all rich districts did it?
If all the districts that had the property taxes available to them were able to go basic aid, what that would do, because the State Department of Finance could say, you know what, State Chancellor's Office, you don't need as much funding because you're relying so much now on local property taxes. Therefore, State Department of Finance would cut the State Chancellor's Office. Absent that, just like this in the case this year when San Mateo moved out of the pot, their budgeted state apportionment is now coming back into everybody else. So if you were to have all of the districts with property values that would support them being basic aid, if they were all able to make that change and the State Chancellor's Office did not get a cutback from the Department of Finance, theoretically, all of that additional money would go out to the districts that had not been able, the poorer districts, smaller districts, that had not been able to access the property taxes.
But DOF could also just trim the amount of money. And that would be a budget cut.
Absolutely. And then that would be monies then that would be available to the state, or, you know, if it's state in education, it would go to K-12s and the UC system, but it would come out of the Chancellor's Office pot to allocate to everybody else.
Is it likely that our district would come out ahead? I mean, would we be able to support ourselves through the property taxes?
I haven't done that analysis for your district, but the point remains that if you're getting 100 million this way, and by having the ability to retain 110 million from basic aid, you're 10 million ahead.
Yeah.
But again, it's not necessarily a choice. You have to go through some parameters and calculations and really determine if you're eligible for it.
Yeah. I'm just thinking with, some of the pretty affluent areas that the properties are worth quite a bit of money in the area. in the district.
Yeah, I think that there might have been several years ago, more of an ability for districts to move in to basic aid status, and then they went through into the equalization, which was providing more funding to the districts maybe that did not have the property taxes, or the wealthier districts. And so it evened the playing field a little bit, but it might again be at a point where it's something that if the calculations work and the parameters are in place, that it would work for you. Most basic aid, the basic aid districts would say, yes, we're better off keeping our property taxes and not relying on the state. It's more stable, money's coming in on a regular basis, and we're able to fund our programs.
Okay, so now does that mean that then like we would lose all state funding?
State apportionment funding, you still get your categorical programs.
Okay.
You're still eligible for any state bond money that's come in for capital projects. It's just the apportionment.
So how much is our apportionment approximately?
80 million.
80 million.
Okay, I understand that if we increase the property taxes, that the state apportionment would go down, and that goes into the big pot, so the rest of the colleges can. But I don't understand, with the property taxes that we get now, they're all being spent in some way, shape, or form. So if we suddenly got 10 million more, somebody's gonna lose 10 million somewhere, because those property taxes are being dispersed and spent. So, first of all, with the property taxes, is it just our district, or right now, everybody chips in LA County, and then we all get a portion of that? And you're saying if you went to basic aid, that we would then be relying on the property taxes of our school district, PACCD district?
Correct.
Okay, and then the rest of LA County would divvy up the rest of LA County taxes.
But it also goes to the state, so you have net exporters of property taxes and net importers of property tax, so that you have poorer districts are subsidized. So the way that the system actually works, and through the equalization process too, is to try to not have pollution in poor districts. Okay, so when it goes to Sacramento, that's just the way that they budget it. Now, in the end, you're right. And what you're saying is that the local K through 12 will end up being shorted.
Because we would get a larger portion of those property taxes than that they were taking right now.
And I think that that's the issue that's being discussed in San Mateo right now, is that there are a number of, there's several K-12 school districts within that area that are not going to be getting some of the property taxes that would have been in a property tax pot. It's just, this is San Mateo College's property taxes now, and it won't be shared. There's only so much, there's always a net gain on that loss. And, you know, it just depends on how it works out as far as how that is going to impact a specific district.
That could be a popular move on our part then, huh?
Yeah, it wouldn't be. Well, so if we're collecting the property taxes from our district, the rest, if we went to basic aid, the rest of the community colleges and the K through 12s are still, all the property taxes are going in as a county, and then they're divvying that up, whatever the percentages are. So there would just be less in that big pot for all the rest, because we took our area and took our property taxes from them.
The prorated part, sure.
Yeah, that.
Wasn't this whole system created because they didn't want rich districts having more than poor districts? Okay, so if everybody goes to this, it seems like someone's gonna say, you know, you live in Bel Air, you're not allowed to have a mansion, when in this neighborhood, they live in a
That was the
800
part
square
of
feet.
equalization. Yeah, when they went in and said, well, that very thing, you know, we're not going to create a rich district versus a poor district, especially when they are so close in proximity to each other. And so, so the equalization makes it more difficult to be able to really identify your own property taxes and say, hey, wait a minute, we want those to flow specifically to us so that we don't need the state. But it does. There's a large chunk of money coming into all community college districts because San Mateo is now opting out, and the State Department of Finance has not cut the overall apportionment pie.
Yeah.
So this year it's a net gain for everybody. San Mateo's much happier, and all community colleges should be smiling right now. It will be divvied up, and it would be in the form of either less of a deficit And it's not necessarily extra money, but it's less of a cut, less of a deficit, less of the unfunded FTES that will flow through. So it's a net benefit to everybody. But you're right, if everybody does it, somehow it's going to get cut off.
This seems counter to the whole equalization thing, so my point, there's gotta be some, otherwise every community college that's in a wealthy area is gonna realize this and they're gonna try to do this. So what are the hoops you gotta go through to do it? I
Well,
mean,
except for what I think Rick just said, which is the political implications of doing that, and the damage that you do, you know, your feeder districts, and, you know, I mean, it'd be a tough decision for some of our elected officials to make who are close to their local community.
Can you imagine the headline for PUSD,
yeah.
Yeah,
who are struggling to stay afloat?
exactly.
Okay, any other questions for Heidi about anything having to do with the audit or finances?
Thank you very much.
Thank you.
Thank you.
We appreciate it.
Long drive back now. But maybe you can get ahead of the traffic.
I'm shrinking it.
Thank you. Sorry, Bob. Thank you. Okay, that was extremely helpful. Let me, as long as we're talking about quickly, let me hand out some of that. This was from the state control. This is a press release. What you see is, you know, there's really no end in sight to the free fall that's happening. Every time you turn around, they're earning less money, and the deficit has become bigger. And I know that there's a lot of pressure on the November ballot initiative, and I know that they're trying to put as much pressure as possible on that before it passes. But even if it does pass, I cannot imagine it's going to be a panacea to the problem, because the hole that we've dug has been dug so deeply that it's going to be very difficult to climb out. But that's just for information. We got that, I think, Tuesday, the 8th of May. Okay, and here's one other piece of, well, it's a packet, but pieces of information. This starts to answer some of the questions, hopefully, about FTS and enrollment losses. So this is 4 sheets. The front sheet is FTS by division as a percentage of the total. Okay, so one of the things that is possible to do is that if we determine that, you know, 19,000 is the FTS target, or whatever that number turns out to be, we could just apply percentages that are based on the trend. And you can see that the trends are pretty consistent. The largest change actually was in kinesiology, health, and athletics, which is even less than 1%. This is on the orange part. So that's pretty stable. So what's possible to do is to assign percentages to whatever number, and then that would be the target for each division. But it's also possible for us to emphasize a certain division or de-emphasize another division or whatever. So, but this provides some of the data in terms of which divisions are producing the FTS.
Okay, now, with this you mean like, okay, so social sciences had minus 0.64% number of sections or number of, what?
FTES, full-time equivalent students.
Okay. Well, it doesn't look like we've cut hardly anything. Am
Well,
I
but-
not understanding?
No, but in fairness though, the way the numbers work is it always adds up to 100%.
Yeah, this is
So
just
if
an
the pie-
allocation.
If the pie got smaller, then it's still a percentage. So, no, you can't.
As a percentage.
But what it's showing is that the percentage has stayed relatively constant from one year to the next. That is true. So it's another methodology that we can use in order to come up with FTS goals. Okay, now the next 2 pages show enrollment losses. Last time we had fall and spring. This time we've added summer and winter. So you can see where they've occurred and what the retention rates have been. And the retention rates, I think, Bob, are based on the enrollment per census.
Yeah, there's three. There's the first day enrollment, then first census, and that's where when all the ads are added. And you'll notice on the fall, enroll end of term. So that's basically the very specific history for the fall term. In the spring, on the next column over on the right-hand side, we have enrollment through May 7th, which is the date in which we put this report together. So obviously, when we get to the end of the semester, we'll have enroll end of term, and that 7% number at the bottom will change based upon what happens at that point.
But the percentage is not based on first day, but on first census.
On the census.
Yeah.
Yeah.
So that starts to give some of the texture to the numbers from last time. And then what the last page does is it summarizes the bottom lines there. So what you can see is that the enrollment on the first day to census, which is 2 weeks thereafter, went up by 9,000 enrollments. And then at the end of the term dropped to 139,000. Although, as Bob just pointed out, in the green line, spring of 2012, that 60,011 number is going to drop. So that 7% loss is somewhat misleading at this point, because we haven't yet hit the end of the term. So it's slightly apples and oranges, but it's near enough that we can see what the trends are. And it also shows that of our 154,000, we're losing whatever that is, 15,000 students from census to the end of the term. And I think that this will form the basis of a metric for success on several fronts. In the first place, in terms of the enrollment number, making sure that we've stabilized that number or increased it. And then secondly, and as importantly, that we measure success by how many students successfully complete the course. Because ultimately, that's what it's about. It can't ever be about how many people show up to class the first day. It's got to be how many people graduate at the end of college. Okay, any questions on that?
Will we have the numbers of the drops for the next meeting?
The drops, of course, we won't have the end of term. Is that what you're talking about?
No, just till the end of the drop date, which is today.
Tomorrow?
Oh, tomorrow.
Okay, so you want to address this?
Yeah,
Okay.
just one thing. I understand.
Randy's question first.
Well, is it specifically an answer to that?
It's-
Just give me 1 second.
Yeah.
The answer is that we could next time, which will be in 2 weeks from today,
Right.
provide updated numbers.
Exactly.
They still, however, won't be the final number.
No, but it will reflect the drops, though. That's what
And
you said.
that 7% is likely to go to 10 or 11.
So, okay, so I'll make a note that we'll update the numbers for you.
Okay, sorry, Dan.
Okay, just one thing about completion rates. For certificated programs, you have to look at it a little bit differently, because when you're teaching a certificate program, the idea is to get the student employed.
Yes.
And so if they find a job, you tell them, quit school and go to the job. See, somehow we need to get that involved.
Yeah, I'm not quite sure how to do that, because how do we capture whether a student dropped because of the job, or they dropped because of family pressure, or a health issue, or, because we don't have a mechanism right now to do that, do we?
No.
Well, you have the same issue with cosmetology. They have to get a certain number of hours. So they have people graduating throughout the semester.
I had a fascinating discussion. I visited the cosmetology program yesterday, and their bottom line is that when they're done with their 1,600 hours to get their license from the state, they're gone.
Yes.
Apparently, it's been a problem for a long time. They withdraw or they drop or whatever they do. It's not because they weren't successful.
Right.
It's because they're done. So,
The
yeah,
same
it's on
thing when people
my
find out.
to-do list to see if we can figure out what to do with that. And I think with the new AIS, we probably could deal with that. I think the current Santa Rosa just isn't capable of counting widgets that way.
They got it. A lot of vocational classes where they get jobs. Like we
Yeah.
used to have electronic assembly there, and her numbers would drop by the end of the semester. That's because she had connections. A lot of her students were now managers at places, and she got them jobs. And so her number at the beginning would go way down, and they say, well, why does it keep going way down? It's because they got jobs.
Well, I think going forward, we have to come up with a better way to count this, because with our student success achievement targets, it's very important now for us to count every one of those certificates, every one of those completions. And we'll be working on that.
But you also have the problem, she had people that wouldn't finish the certificate, but they got the job. So they went to the job and never finished the certificate. So there has to be a way of accounting for that, because it's still a success.
Exactly right.
That was happening in welding as well,
Yeah.
where they'd start welding and then they get so far and then they were applying for work and then they never finished the program.
Right.
But the whole point of the program was to get them a job.
And that's why on the completion agenda, when we talk about degrees and transfers and certificates, I also included the notion of job placement.
Right, exactly.
So we've just got to figure out a way to count that.
Right. Okay, John?
On the question of efficiency and numbers, it would seem that you'll have no-shows and you can replace those. But there's a date where you drop without receiving a grade. It would seem that that's a place where a large number of changes occur. Is that, and I'm not familiar with that date exactly, but is it 2 weeks, at the 2 week census mark? Bob?
I'm sorry, I missed the question.
Where a student can drop without receiving a W. How far is that into the semester? 2 weeks.
2 weeks.
is it?
Or if it's all, yeah.
But at that point, you can't add anyone either, can you? After that point?
After the first census, can you add students?
No, you cannot after the first census.
So
So
that date is the
So you
same.
can, you're just not going
The
to get
date
paid
is the
for it.
same.
The date is the same for not getting a W and census.
Yeah,
That is
as I
the same.
recall, it was the same, yeah.
Okay.
I
think
mean, you
that's
could,
what
you're
you're asking.
just not going to get
Yeah,
paid for
and
it.
so you lose the ability to replace those students, even though you may have students that are interested.
Well, that's,
But that's one of the reasons why you over-enroll someone.
that's where you want to take more
That's
emphasis.
the same reason why the airline overbooks seats, is because certain people aren't going to, certain number of people won't show up. And then you have people to fill those seats, because for them, the profit margin's in the last chair.
Well, it seems the last round of registration, we were held to NCNs, and we were not to enroll
Yes.
over those numbers, and which you lose that ability.
On the next round, we're fixing that.
Lesson learned.
Lesson learned.
Okay.
Yeah, no, we're aware of that. And basically, we'll have the NCN, we'll have the room capacity, and we'll have what will be called the enrollment limit. So somewhere between the NCN and the room capacity will be the enrollment limit that will be set for every class. And that'll be determination between the division dean and Dr. Bell, Vice President of Instruction. And then, to the degree that we go over the NCN, is a determination that that section would be an LGI, and there'd be a compensation for that LGI.
Okay, all right.
Just, I mean, this is a
Could you
great
state your
discussion.
name?
Oh yeah, this is Kevin Clinton. Hey everybody. I was thinking as a possible solution, maybe we could have this would completely solve the issue of counting at the end, but maybe we could keep the grades of students reported when they drop, possibly with a W, be handed in as a way to gather statistical data, and this would cover all the students who are doing well, but might have family or job reasons that are causing them to drop, and this is what may be a possible solution to counting students who leave for personal reasons. That's all I'm throwing.
So if they're getting an A and a B, and
So, like, they're
then
getting
they
the-
withdraw. It would be different than a D or an F, and then they withdraw.
Yeah, so then you would be like, oh, they left because they were
Now, the
doing
challenge there, though,
Yeah.
is that the instructor doesn't turn in a grade.
Yeah, that's the problem. It would be like, oh, then the instructor has to turn the grade for that. But
And
just fine.
typically, you can't do the grade until the course has been complete, because then there's going to be a final exam and so forth, or a paper. Or
Yeah, so what I'm asking is, at the W point, there's a reported grade for people who drop.
Okay, but typically, speaking for me, that would be very difficult to do when you're teaching, to assign a grade at that moment in time.
I
And they would-
completely understand.
And the other thing that happens, a lot of times, they just stop showing up.
Yeah, I mean, again, this is just a possible
Yeah, no.
solution to all the data gathering issues, just something to throw out
Okay,
there.
thank you.
John was talking about reinstating, oh, let me tell you what some of our instructors are doing. I don't know if it's even legal. They, say a class limit is 35 students. The instructor will take it up to 40, drop 5 of those students before the end date, and then after, along the semester, as he has openings, he reinstates those students. So that he is filling the gap.
But if they're entered after census, then,
Okay, the
so
first,
they're filling a space that someone allegedly had?
yes. So the first 2 weeks, at the end of 1 week, I've got 42 students. And now I have to get it down to 35 by the end of 2 weeks, so I just drop 7 of them. Then, as other students drop during the semester, those students are reinstated because they're already on the roll, they've just been dropped.
And they're attending class.
They continue to attend, and then they're,
Wow.
now, I've not done that, but it's tempting.
Yeah. Let me say I'm glad Heidi has left the room.
She can review it on
Yeah,
that. What's the incentive to drop to 35?
Because we're told that that's all we can
Oh,
have.
but I think that we've corrected that now.
Yeah, I think we have.
Because basically it comes down to the room capacity, which is essentially the fire code.
Right.
So between the normal closing number and the fire code, usually there's a delta, not always. Okay, to the extent there's a delta then, what it would basically mean is that an instructor would have the capability of adding up to the fire code, and which would mean that you wouldn't have to go through those gymnastics. And it would also mean that more students get served at the beginning, and the numbers would trail off toward the end, and hopefully it all washes out at the end.
And one of the reasons why we're delaying the posting of the fall schedule until June 4th, as opposed to Monday, is to give the deans time, working with Dr. Bell, to basically establish these enrollment limits based upon the new model.
Now, if I remember correctly, in the contract, there has to be an agreement ahead of time between the dean and the faculty member.
That's correct.
So,
But we can work that out ahead of time
Okay.
as a possible provisional agreement.
Right.
okay.
So we're aware of all of that, and they're sort of trying to work it out. And they're, as Rick just said, in a large-scale way, there might be a way to deal with this as opposed to an individual.
So if you're provisionally pre-approved,
Okay.
and then if it pans out, then you're approved.
Okay, because what I didn't want to happen is they let them in, and then they go, well, you never got approved
Right.
for that, so you're not getting paid for that.
No, we're not going there this time.
No, so we're trying to make this far more seamless to the students. Because unfortunately, a lot of times students end up being the ping pong in this little thing.
We're really trying to increase the access, trying to maximize the number of seats based upon the FTS that we get.
And allowing the instructor to have flexibility.
Right. But we still have to figure out what all it's going to cost, and that's part of what this model is about that we're creating.
Right.
Alice?
I had a question. At the time the student drops, can't you just put a reason for withdrawal when they are actually withdrawing?
Yeah,
Can
the
you
problem-
computerize that or
A
something?
lot of times they just stop showing up.
We don't know.
And you have no clue, and you can even call them and they don't return the phone
Because I know
call.
it says teacher drop when the teacher actually drops.
If the teacher drops, then that's easy. And normally, of course, that occurs in the middle of the semester, and it's like for non-performance or for non-attendance, right, typically, or for lack of progress. The trouble is that very often you have no indication from the student why they stop coming to
Right.
class. And the biggest indicator is if students don't come to class, they won't succeed in the
Because as many as we can capture as far as like the student goes to drop, when we put reason for dropping, and they can put, A, B, C, D, whatever we select that they may have.
Do we know what percentage of students actually complete a W as opposed to end up with an F for?
I'm sure we do. I don't have it off the top of my head, but I'm sure we do.
But even if we ask students, we're not going to necessarily give the reason that they dropped.
We try.
Hannah is a student at maybe.
Why do you drop, man?
Yeah.
I think the issue issue with the drop reasons, that's all gonna be self-reported, but perhaps, you know, it's my understanding that in the near future, there will be .edu addresses, email addresses for students. So perhaps if students aren't going to their class and they haven't officially dropped, the instructor hasn't dropped them yet, there could be a notice sent to them, like, do you intend to drop? You know, can you provide a reason as to why, so that we can collect this data to better serve students in the future. I think students would be more than likely to explain why, because, you know, they don't say, oh, it just got lazy. I'd be way more inclined to explain, you know, work schedule or a loss in the family versus, you know, I just didn't want to show up anymore. Usually more often than not, students, you know, because we are such a non-traditional college and the students that we serve, it's more often than not, you know, they fall behind for some pretty extraordinary reasons. And so I just want to say I really like this idea and I hope that we can move forward with it. So.
Okay. All right, anything else? We do need to talk about the schedule.
You know, I just wanted to bring, as far as the principals go, and maybe there's problems with this, but they have a principle or a guiding principle that says one-time expenditures should be paid with one-time funds. Because what I'm trying to do is prevent one-time expenditures taking from ongoing funds. You understand? Because we have this.
Oh, that's right. Okay.
I'm trying to keep as much ongoing funding available.
Okay, but so what you're saying is that if there's a one-time expense, it shouldn't be charged against an ongoing revenue stream.
Right. In other words, if there was let's say the AIS system completely crashed today, and they needed $12 million today, that those funds would be taken from funds that are one-time funds. Like we got $100,000 sitting in an account for a multi-purpose field on parking lot A that we're building a science village on.
Right.
So they would be forced to take out of accounts like that are just money sitting there for no purpose.
Yeah, but in the EMS also, we're going to have to start setting aside money to replace the athletic field too. Because it's a 10-year field, and we're probably going to have year 7, and it's about a $400,000 expense. So.
Well, I mean, that can be part of the whole process, but I'm just saying.
Here's what and think about this, that sometimes within individual divisions, you'll have one-time expenditures to upgrade a piece of front-end alignment equipment. Okay, and it turns out to be a one-time expense, but it's paid for out of an ongoing revenue stream. So there are situations where, as a part of normal operations, you do one-time expenditures.
Okay, so it's a guiding principle, it's not the law. So if it's a guiding principle, if they need to do that, they would just have to give some kind of a justification.
Okay, so
to prevent that from.
I'll tell you what let's do is, we'll kick that around to fiscal and see
Okay.
what the implications of that might be.
All right, thanks.
Okay. All right, so what Cindy did here is to, in the green, to show where the problems will occur by, and this is on the assumption that 440 will occur from basically the day after commencement until August the 10th, through August the 10th. What it means is that those things in green would be conflicts with this meeting.
It still may be a conflict, but based upon the classified days being on June 22nd, Gary and I have to work this out, but it may very well be that the decision is to start the 410s the following week in order to maintain the
That
classified
would be a
days.
popular move.
Yeah, start the following week.
Wow.
Ouch.
Well,
We'll talk about it anyway, I
Yes.
just wanted to
That'll
mention it.
be popular.
I had a couple of thoughts. One was, I'm wondering if we could move the meetings to Thursday afternoons instead of Friday afternoons, was one thought.
Andy
And,
hates that idea.
and another thought is, are we, how do I want to say this delicately, but that's not my style. Are we doing enough that we need to meet every week?
Apparently we are.
Yes, you're doing a lot of things. I enjoy coming.
I mean, I know that,
We
you
might
know, it
consider
seems like there's
reprioritizing.
it just seems like there's so much that's dependent upon, you know, how much we get from the state, what happens, you know, this and that.
I know, and I'll tell you, when you go through this, and part of the reason is because we promised that we would, but that's not necessarily a great reason to do it. What we're gonna find is that next week, and we're gonna go dark next week, but the May revise is scheduled to come out on Monday. Okay, that starts to change things. Then what's gonna happen is that right now fiscal is working on the refinement of the budget numbers that we talked about last week. So that hopefully in 2 weeks from today, at the next meeting, we will have those numbers. Okay, there's gonna be a flurry of activity that will pick up. And what's going to occur is that, you know, when we start getting into August, we're rolling out pretty quickly into the budget. Probably somewhere around August, the 12th, 13th, 14th, we'll actually get the numbers from the state. And then there's going to be the mad rush to the finish, because then we're going to have 4 weeks to put the entire budget together. So what's going to occur is that starting in a few weeks, there's going to be a lot of work on the division end. So what fiscal is currently working on is to put together the numbers, particularly and most importantly with the 90% wages, salaries, benefits, so that there's a report that can go out to the divisions and departments to show what the cost is of the employees, because that's the basic building block. Simultaneously, then enrollment management is working on the overall schedule to maximize enrollment and fit costs within the budget that we're going to formulate. So I will grant you that a significant chunk of what we talked about to this point has been preliminary, but with those building blocks in mind, there's going to be a certain flurry of activity. Now, I'm not going to say that every single week that's going to be true, but increasingly it will be true. But now what I'd be open to is if the committee says that, you know, we can, maybe Keith and I get together and say this week there's not enough information to warrant, you know, even an hour-long meeting, that we cancel it. And that if we think that there's enough to have at least an hour-long meeting, is that okay by everybody?
That's a good idea.
And then, so Keith and I will you're going to be here during the summer? Part of it?
Already gotten.
Okay. So how's that? That work out?
Yeah.
Very good. Okay. And then we'll do the best we can to cancel whatever meetings are unnecessary. Okay.
And then Thursday afternoon?
And Thursday afternoon, how does everybody feel about Thursday afternoon?
I'm against it. I have a legitimate reason. I want Hannah to come to my committee.
Well, the problem is that if we're not going to meet on Fridays because the college is closed,
Oh,
we don't
yeah.
have a choice. We're either going to meet
Oh.
some other time or we're not going to meet at all.
Oh, yeah, you're
For
right.
the summer?
Yeah.
Thursday? That's fine.
Oh, yeah, that's fine.
So I'm pretty much okay on Thursday.
Maybe we could do that into the fall.
And any particular time? 12:30 is not the handiest time for me, I'll say that much.
What do you?
Well, I mean, if it's like 1:30 to.
Well, for those who aren't here on a regular basis, would you prefer morning, just get out of the way so that you don't?
Yeah, Thursday morning is difficult too,
Okay.
because now you
I
gotta get
prefer that.
Thursday afternoon, 1:30 to 3.
Sure.
Okay.
That reasonable?
Maybe we can go into the fall that way, if everybody's able to meet.
I'm hoping so. Friday afternoons tend to be difficult, because by Friday afternoon, it was pretty much shut.
So every one of these dates, we just go subtract 1 day, right?
I'll put it.
So Cindy will put out a revision, okay? And then everybody can throttle Gary on the way out about that, June the 22nd.
Yeah.
Good thing I'm close to the door.
All right, is there a motion to adjourn?
Yes. Second.
Seconded by Gary, because he wants to run. Meeting's adjourned 2 o'clock. Watch Gary run.